Okay. All right. So this is year-end processing for FY24. This year is going to remain the same as it always has. And I'm hoping that next year it will be the same as well. The following year, I don't know, but they say that Workday will be live in 2025 for some stuff, but not all. So hopefully everything will remain kind of the same for at least a little while longer anyway. So we're going to go through all of the steps today that you need to do for year-end processing. The first thing that we're going to do is go through your preparation steps. Preparation steps will be steps that you do from now, or probably steps that you've already started, all the way up to whenever your college goes down for year-end processing. So the preparation steps do that, and then we're going to jump into processing for year-end. We're going to give you exact report parameters. We're going to go through the questions and answers that we've gotten over the years, and then we have a checklist item for the things that you guys need to keep when you do year-end for auditing purposes. Sometimes they ask you for reports as of June 30. So there's a lot of those reports that we'll have you guys pull. You don't have to keep them on paper. You can extract them out of Banner and keep them electronically. If you have a shared drive in your office, that would be where I would say to put them in a year-end folder labeled FY24, and that way if they ask you, you have them. So that's kind of the agenda that we're going to go through today. If you have any questions at any point in time, you feel free to put it in the chat, and hopefully I'll see it pop up. If I don't, I'll go through the chat at the end. And then if I miss your question, I'll just feel free to unmute and ask. I don't have a problem with that. Okay, so preparation steps for getting ready for year-end. Write-offs. So we went through in our training sessions this year, we went through our due diligence, and then we went through collections, and then we went through write-offs. So those are the ones that we're kind of going through. And if you just joined us, if you don't mind muting, that way we don't get any background noise. So write-offs should be happening. They should already be happening, or at least you should be at the point where you have your file together. Your VPA has gone over it. All the stuff is good, and you're ready to send it to SAO for approval. The training that we went over for the write-offs, it walked you through going and doing the SAO write-offs. The SAO spreadsheet, however, it's a little conundrum. Like it only has 70 spots, but most of you are going to have way more than 70 people. So I've had a couple of questions on that. They're like, do we have to email SAO? Try to insert records first. And if you get an error message inserting records, then you email that email address that I gave you for SAO to add it. So everybody so far has been able to add as many rows as they needed to this year. I think they, over the years, have perfected that, but the first year was an issue. So, when you do your write-offs in audit mode, just make sure that you are generating an output population selection. So that output population selection that you're generating when you run ZFR Write in audit mode is what you are going to turn around and use as the input population selection when you're doing your write-off in update mode after you get approval from SAO. Hopefully you will be running that process before June 30th. That's why we try to get you guys to send your write-off files to SAO for approval as quickly as possible. Sometimes they have a very quick turnaround, sometimes they don't. So the quicker you can do that, the quicker you can get that ran before then. But you want to make sure that you're using that output population selection that you ran in audit mode as an input population selection when you run it in update mode, simply because you only want to be writing off and acting on those students that you actually sent to SAO for approval. Because if you run ZFR Write wide open, it's going to pick up anybody new that has met the criteria to be in a position to write off, even if you didn't send them to SAO. So we just want to make sure we're only acting on those people that we did get approval from SAO on. Then you're going to continue to run your normal application of payments process, except for Savannah. I'm working on you guys. But anyway, so continue to run your normal application of payments process. Application of payments, the closer you get to June 30 is going to be more and more important, because when you get to June 30, your accounts have to be clean. So that's going to be an important process. And then you're going to jump into your GLE data and your GLA EXTR to run pop sales, correct payment, and correct charges. Now, these are just helpful pop sales that will give you students that you might need to look at because their accounts are not in their correct form. So when we say correct form, when we talk about payments, a payment, if you have a payment in Banner, it should always have a negative balance. And when you have a charge in Banner that's in its normal state, then the balance will always be a positive balance. So if you have payments that are sitting on the account that have a positive balance, or charges that are sitting on the student's account that have a negative balance, those charges and payments are not what we call in their normal state. And if they're not in their normal state, they will cause you to be out of balance when you come to year end. So those are population selections that if you have done year end before, which every college has done year end before, but if you haven't in particular, you may want to go out to the GLR SLCT form and do a search on correct underscore payments and correct underscore charges and see if someone else has already created those population selections, and then you can copy those. There is, in the documentation that I'm going to send you, there is a copy of the correct payments population selection and a copy of the correct charges, and several other population selections that we may or may not use depending on if you have a hard time balancing. But we will provide those to you. I'll provide those to you when I send out the email, and then you can compare that population selection to the ones that you already have on your box and make sure that those match. If they do and they belong to someone else, all you need to do is just simply copy those over to your ID, and then you can turn around and run those. So those two population selections do that. But we also have another process that will help you find charges and payments that are not in their correct or their normal state, and that is ZFR audit. So if you run ZFR audit with parameter number 4 set to a Y, it's going to put on that report students that have application of payments issues on their account. People get a little bit confused when they run ZFR ZFR audit, because sometimes they want to put a Y in parameter 4 on a normal basis. And if you don't have any students with application of payments issues, then you won't pull anybody on the report, and then they're like, I don't think this report's working. But it's simply because on a normal basis, when you run ZFR ZFR audit, you want to have parameter 4 set to an N, not a Y. You only want to set parameter 4 to a Y when you're looking for application of payment issues when you're running ZFR audit. So those two population selections and that one report will help you find any application of payments issues. And again, application of payments issues have to be corrected before you can close out for year end. Otherwise, you're going to be out of balance. ZFR audit also can show you detailed receivable information, and later on we'll give you the parameters for that, because at year end, receivables are important to know, right? So that is an important thing. So, TGI CCD queries. This is a third way to find accounts that are not in their normal state. So these are all TGI CCD queries that will tell you if you have application of payments issues. So if you run a TGI CCD query with source code R, with the balances less than 0, that is going to give you people who are not in their normal state. So source code of R means that it came from the registration module. Generally, anything that comes from the registration module are what we call charges, right? So charges are in their normal state supposed to have a positive balance, right? So if you have a source code R with a balance less than 0, then you have stuff that is not in their normal state. I just got a notification that I'm having some networking issues. So if you guys can't understand me, or if I start breaking up, will somebody unmute and let me know? So then we have W. So W, if a source code W happens, then that means that it came from the web. And if a charge comes from the web, then that means it usually came from somewhere on the registration side. And if it has a balance that is less than 0, then that is something that's not in its normal state. And then if you have an X, a source code of X means that it came from the bookstore. And generally, when you have charges coming from the bookstore, those balances should be greater than 0. So if you have a source code of X with a balance less than 0, all of those students are going to need something done to their account, whether they just need a simple application of payment or whether you need to unapply and reapply because there's a reversing entry on the student's account. And that needs to be unapplied and reapplied. So most of the time, when you have source code RW and X with a balance less than 0, that's generally what it is. Maybe the student dropped class. Maybe the student returned some books to the bookstore, you know, that type thing. And you just simply need to unapply and reapply. Then the next TGI-CCD query that you can do is a source code of F. Source code of F means it comes from the financial aid module. And if it has a balance greater than 0, then you have some sort of issue going on with application of payment. So when it comes from the financial aid module, generally those are awards. And so when we have awards or payments, those balances generally have a negative balance. So if you have a source code of F with a positive balance, then most likely that student has gotten some financial aid reversed, and generally you're going to just need to unapply and reapply in order to get that balance back the way that it needs to be. Your next TGI-CCD query is going to be anything with a detail code of %P, which means there can be anything in front of it and it ends with a P. The source code of C means it comes from the contract module. And if you have a balance greater than 0, because that detail code of %P with a source code of C means that it is a third-party payment. Payments should always have negative balances in a normal state, so you're going to look for those. Generally, that is a reversing third-party payment, which just requires a unapply and a reapply. Your next one's going to be a detail code of %C, which means a charge. Source code C means it came from the contract module or the third-party module with a balance less than 0. So detail codes that end in a C with a source code of C are charges, and so they should have a positive balance. So if you have a reversing entry on that, then that generally means that there's a reversing third-party charge, and again, an unapply and reapply would probably fix that issue. And then if you have detail codes that are 1% with a balance greater than 0, a 2%, a 3%, or a 5%, all of those are payment codes, right? So 1 is cash, 2 is check, 3 is charge, 5 is a wire. So if any of those have a balance greater than 0, because those are considered payments, their balance in its normal state should be a negative, then you're going to want to unapply and reapply those as well. And then your final query for TGI-CCD would be 4%. 4% are our refund codes for cash, right? So if they're a refund code for cash, then they're a charge. So if they have a balance less than 0, then there's something going on with that, and you're going to need to unapply and reapply for that. So between these TGI-CCD queries, ZFR audit, and the correct payments and correct charges population selections, those are the tools that you have at your disposal in order to help you find anybody that has some application of payment issues that you're going to need to clean up before year end. And you don't have to just use these queries at year end. You can always use these queries at any time that you're needing to find people that have application of payments issues. So when you're balancing, when you're balancing for, your end of month and stuff like that, that can help. Can everybody hear me? I just got a notification that one person couldn't hear me. Okay. All right. So other people can hear me. Okay. Awesome. So for that person that couldn't hear me, you may need to, unfortunately, drop from the meeting and come back in. Sometimes that happens. Awesome. Okay. In continuation of our preparation steps, your JV report is next on the list of things that can show you items that need to be addressed before year end. So the JV report identifies marriages. So it says what is married to what. So what is applied to what. When you run application of payment, you're applying a charge to, or a payment to a charge, right? And so your JV report is going to identify marriages that you have. It's going to show charges that have been liquidated with your payments. And it can also provide you with your revenue and receivable information. There's also a FA summary at the bottom-ish of your JV report. It's your FA summary, and then under that is a set of TGICC queries and some other stuff, if I remember correctly. So your JV report has an FA summary that can be customized in GTV SDAX. So it is based on how your college books to PeopleSoft. So if you have had any new fund sources added this year to your college, then you need to make sure that you have gone to GTV SDAX and added that entry into the financial aid summary on GTV SDAX. So GTV SDAX, if you go there and you search on group and then put in ZSRG JV01, then you will be able to pick up on that. So there can be 99 different entries for your JV report for your GTV SDAX entries, but once you get to 99, then you can't add any more to your JV report. So if you are a college that has program fees that you separate for every single little thing that you have, or if you have supply fees that you separate for every little thing that you have, if you're getting close to 99, you may want to rethink how you're doing your program fees and supply fees. If you have some that can be all grouped into like PROG or SUPP, if you don't have to break them out, I know there's some specific ones you have to break out, but if you don't have to break out every single one, that's probably going to work better for you on your JV report, especially if you're getting close to reaching that 99. And at this point in time, I hope you are working and cleaning up your JVs and that you have been diligent on cleaning them up, because we're getting close to where a lot of you are going to start shutting down within the next week or two, and you want your JVs to be cleaned. Don't forget when you're running your JV report to make sure that you identify your negative JVs. So negative JVs are let me give you an example of a negative JV. A negative JV will cause you to be out of balance. But a negative JV in this case is, let's say, for instance, we have a reversing TUIT. So say a student was registered for classes and they got some hope, and then they dropped a class, and then their hope got reversed for that class. Sometimes instead of the positive TUIT marrying to the negative TUIT and the negative HO50 marrying to the positive HO50, if you've already ran application of payment and the TUIT and the HO50 paid each other completely, there's nothing for the negative and the negative to marry to. And sometimes, for some weird reason, the negative TUIT will marry to the negative HO50 or to the positive HO50. And that shouldn't happen, and that could cause you to be out of balance. And that is something that super duper duper hard to find if you're out of balance by that much. So just make sure that you are running your negative JV report. And when we give you the parameters for your year-end reports, we will also give you the parameters for running a negative JV report. I want to say that it involves parameter 7 being a Y and parameter 13 being a Y, but we'll go over those in detail when we get to the reporting aspect of this, and you can run your negative JV reports. And you can run negative JV reports at any point in time. So you could run a negative JV report today and see if you have anybody out there that has a negative JV that you're going to need to fix. There is one caveat to that, and that is DRELs, because DRELs, you're using a 2 SCC to reverse that off, so that is a payment tying to a payment. And those will show up on your JV report as a negative JV, but there's nothing we can do about that. It's just the way that those DRELs work. So it's just kind of one of those things where we just try to be extra diligent when we're doing DRELs to not release stuff that we're not supposed to. And just try to be very diligent in not making a mistake when running DRELs. Okay, preparation steps are continued. Once you have done all your application of payments, once you have made sure that your JV report is clean, all of those TGI CCD queries and all of that fun stuff is clean, then you can run TGR Recon. If you're trying to run TGR Recon during the year, you may have some issues running that because TGR Recon expects that every account that you have is clean and that you are just as clean as possible when you run TGR Recon. So if you try to run TGR Recon when you have other stuff going on in Banner, if a payment hits TGR Recon before you've had a minute to, after you ran your JV report, made sure it was clean, and before you ran TGR Recon, if somebody makes a payment, then that payment is going to show up in a column that it necessarily you don't want at year end, but it's simply because Banner is open and running. That's one of the reasons why we have you guys shut Banner down at year end and don't have anyone in it but the business office and the bare necessity people who need to be in it. It's simply because if someone makes a payment, then you have to start all the way back over in doing your end of day, all of that kind of fun stuff, because TGR Recon won't be clean if you don't. So TGR Recon, you're going to run that. You're going to run TGI CCD to identify any credits that you may have. TGR Recon, you're going to want to pay special attention to the top portion of TGR Recon that lists out missing charts of account. If you have anything with a missing chart of account on it, then you're going to want to scrutinize that detail code, because that generally means that you're missing your GL information. And TGR Recon has to have the GL information because it uses your A and B accounts in order to pull information for that report. So if you have any missing chart of accounts at the top of the page, then you need to make sure that you scrutinize those detail codes and make sure that you have your A and B accounts in there. The only exception to this rule is those colleges that are merger colleges. Merger colleges may always have detail codes at the top with no chart of account. And the reason for that is that this, College A may have merged with College B, and College A used this detail code, but College B didn't. And so now the college as combined college no longer uses that detail code. So they took out the A and B accounts. Those are okay for them to be up there as long as none of your students, you haven't been putting that detail code on any of your student accounts. So if you're a merger college, you may have stuff at the top of the account that may be okay. You just need to look at it and scrutinize it. TGR Recon Part A is going to show you your receivables. What you want to do with TGR Recon Part A is go through and make sure that you have no payment detail codes in Part A, because Part A shows your receivables. So if you have a, 2 TUI in your TGR Recon Part A, something's wrong, right? So you need to go back and you need to work on cleaning some accounts. And if everything is clean, then your Part A of your TGR Recon totals should match and balance to your positive aging report on TGR Ages. TGR Ages is one of the reports that you're going to run at year end to make sure that you balance. Then you're going to want to look, we're going to talk about this more in slide number 7, which is the next slide, but do you have any receivables that need to be reclassified into something else? Some colleges do reclassification on some detail codes, some colleges do not. If you're sitting here going, I don't know what reclassifying means, then your college probably doesn't do that. And so you'll just ignore that portion and the whole next slide. TGR Recon Part B shows unapplied payments. So verify that there are no charge codes in Part B because Part B is going to show payments only, right? So Part A is receivables, which is charges only. Part B is unapplied payments, which is payments only. If everything is hunky-dory and great, your Part B of TGR Recon should balance to your negative aging report for TGR ages. If you balance that way at your college on a normal basis, then if TGR Recon Part A balances positive aging on TGR ages and Part B balances to your negative aging, then you are balanced, right? So you're good to go. Now, you won't know this until you run this on June 30 or whatever day your college goes down for balancing and closing when you have Banner shut down, right? So if you have any refunds that need to be generated prior to year end, get those done ASAP. And you can use TGR Recon Part B because TGR Recon Part B will show you unapplied payments to see if you have any out there. And then you can go out there and you can look at, do TGI CCD queries for students with balances less than 0 to see if you have any students out there with credits on their account that need to be generated before then. If you do have those refunds that need to be generated before year end, then you need to run ZSR refund and ZFR check in order to process those refunds through. Okay, this is the one where I was talking about, we're going to talk a little bit about reclassification of receivables. But again, if you have no idea what that means, that probably means your college doesn't do it, and you do not want to start doing this at year end, right? And you never want to do this without talking to your VPA. So this is optional, and it can be done on certain things. It can't be done on all things. It can only be done on charges. You have to know your data, and you have to know what you want to reclass. And the reclassification program can be ran by term or across the board, but once you run it, it may require you to unapply and reapply. So reclassification is simply this. Most of the time, people are reclassifying book information. So if you have, say a student has a Pell book, which comes over from the bookstore as a PLCL, say they had bought some books in the bookstore using their financial aid, and now their financial aid has gotten reduced, and now you're carrying a balance sitting there on the PLCL. Some colleges choose to reclass that PLCL to BOOK so that then any aid that the student gets in the future can pay that book charge and not just Pell. It's weird to have a PLCL book charge tied to like SCOG, if that makes sense. So most colleges are reclassifying that PLC book charge to BOOK. Some colleges will reclassify PLRF and will reclassify it to another fund. It just depends on the college, but most of the time when you're reclassing, it's your books. But again, if you don't do that now, don't start before year end, and make sure that you're talking to your VPA first. Okay, so those are the steps that you should be doing pretty frequently the closer and closer that we get to year end. So you're going to run your TGI CCD queries, you're going to run those payment and charge population selections, you're going to run ZFR audit, you're going to be running TGR Apple, you're going to be running your JV report, all of that stuff to make sure that you are cleaning accounts and getting them as clean as you can possibly get them. So that is what you're going to do, or should have been doing. Most colleges, I think, start trying to clean accounts around the first part of June, honestly, and they clean all the way up until they can't clean anymore. So those are steps that you need to be continuing. If you need to get your write-offs approved, go ahead and get those approved. If you need to, run your write-offs in update mode, if you've already gotten those approved, go ahead and get that done. All of that fun jazz goes into your year-end stuff. But then you get to the day of, when you're actually running your end-of-year processes. Now, that could be June 30 for your college, but it may not be June 30 for your college. The amount of time that it takes that you're going to be down is the amount of time that it takes your college to clean up. The cleaner you have your data leading up to year end, the faster you're going to be able to run your year-end processing scripts that you need to run, make sure that you balance, pull all the data that you need to pull afterwards, and then come back online. We have some colleges that are down for half a day. We have some colleges that are down for 1 day. We have some that are down for 2, 3, and we have some that go down for the whole week before. So I say all that to say, you don't necessarily have to be like doing all of this work on June 30, but most colleges don't go down and come back up before June 30. It would skew the waters a little bit. So it just all depends on your college and how much time your college needs to be down. And people are going to ask you, I know they are going to ask you, do we have to lock everybody out for year end? Yes, you do. The reason for that is, again, people don't know what causes different things to happen in the student's account. I have had people who allowed the business office staff to stay in Banner on the day that they were shutting down, and then someone in the business office said, oh, well, I have some third-party payments that can be applied today, so I'll just do that. Well, not realizing that that went onto the TASREV account and then caused issues with year-end. So even the business office staff sometimes doesn't know what can cause issues with year-end close. So your BPL, if you're a managed service college, then your managed service Banner project leader will handle that. If you're not a managed services school, then your local Banner project leader will need to be the one that will lock out any student accounts. And those IT folks should already have the lockout scripts. We've been doing this for years now, so this should be nothing new, unless your IT person is new, and then they might freak out a little bit. And if they do, then you need to tell them that we have scripts for that, and they need to get in touch with someone in Enterprise Services to help them run those scripts to lock everyone out. There are a few financial reconciliation reports that you will need. These are reports that we have been asked for copies of at audits, and so we have added this to the list of things that you need to pull. So the financial aid reconciliation reports that are needed are, we need for your FA department to run ZFR GSFC, which reconciles your state funds. And then for your federal funds, we need for them to run RER GRNT. You will probably need to ask your financial aid folks to run this. Some business office people have access to ZFR GSFC, but most of you are not going to have access to RER GRNT. But ask for copies of these reconciled reports because they are supposed to be reconciling at year end as well. And if they ask why, just tell them that we have been asked to provide those to the auditors and that we need to have these reports for them. For COD, you can ask them for their COD report for Pell and loans that ties to Banner as of June 30 with no discrepancies. And then SURFR reconciliations, also you can ask for a copy of that report at June 30 with no discrepancies. Again, these are just reports that VPAs have been asked for in the past during audits, so you just need to have them. You need to grab them off electronically and just put them in your shared drive for your year-end reports. You may not ever be asked for them, but if you are, then you would have them. It was just in case. This was a recommendation from one of our VPAs when we had year end of 1 year, because they were actually asked for those reports when they were doing going through an audit. No payments should be made via the web or via RTS after some cutoff time that your college determines as to whenever you are going down to start processing for year end, or no later than the morning of June 30, so that you have time to do end of day processing, all the steps that you do for end of day, then application of payment, then your JV report, then all of those fun things that we do. Make sure that RTS Manager and the web are shut down. We have documentation that I'm going to provide to you guys on how to shut down RTS Manager to make sure that no one else is paying online. But there are also spots on your website that only your IT folks can get to via WebTailor, and I think they have the information to cut those scripts off. So we just sometimes have your BPLs disable those links on the web, because we have had students find a random link for paying online for RTS, and they snuck in and did a payment when a college was almost done balancing, and they had to start back over because they did a payment. So if you use web transcripts at your colleges, make sure that you have turned off access to web transcripts, especially if those students pay for those transcripts via the web and it goes directly into your banner processes or into your banner TASREV screen. Those are important. There's an entry on GTVX DAX that you can turn off for transcripts requests if you're doing it via banner web. If you use a third-party processor for web transcripts, just make sure that those entries are not going to TASREV if you choose to leave that open. I would say to kind of shut that off if I were you, just to be on the safe side. Then all cashier sessions should be finalized, fed, and reported at some cutoff time determined by your college as to when you're going down, or no later than June 30. On TGAC SPV, that very first screen that you look at, it has to be empty. If that screen has anybody on it, that means that you have active cashier sessions. And if you have active cashier sessions, then that means their data is not fed. And if their data is not fed, then your TGR recon is not going to come out correctly. The only time you should have data on TGR feed that has not been fed is if you are a college that future dates your fall term. So if your 2025-12 term is, you are already registering for that, but you have your effective date on those registrations set to July 1st of 2024, yes, 2024, then that means it will go over your future dating and you are putting that in to the next fiscal year. So that data has to be accounted for, but it will not feed through until you do that. All application of payments errors should be verified and or corrected.
I'm fixing it now. Okay, got it.
Does somebody have a question? I hear,
Yes, I
hear someone.
I'm like, what is this sex madness? So you can just apply those two, and then you
Just a second. Okay. All right. Had to find that person to mute them. Okay. All right. All right. Okay. So no payment should be made with the web. We've gone through all of that. Application of payments errors should be verified and corrected. If you're not future dating on TGR PPL, then you set parameter Y to parameter 9 to a Y to find students with issues. You can also use the ZFR audit. Don't forget to find application of payments issues. That would be parameter 4 set to a Y. Or you also have the TGI CCD queries and your correct payments and correct charges population selection. So you're pretty much going through the same steps that you did for preparation, minus the write-off updates and all that kind of stuff, when you're actually doing your processing steps for year end. All fiscal year JV reports should be verified and make any last minute adjustments that you need. And once you have run your JV report and your application of payments and all of that fun stuff is clean and your accounts are as clean as possible, then you're going to run TGR Recon, right? TGR Recon at that point should be as squeaky clean, right? So all Part B entries, which are your unapplied payments, should be accounted for, and there should be minimal entries on Part B. If you are future dating, you may have some minimal things out there. If you are not future dating, Part B should be empty because you should have refunded all of that money to your students during the lead up time to year end. And then just make sure that you look over TGR Recon and that nothing is in the applied not fed and not fed column unless it is truly unearned revenue because you future dated for the fall term, okay? And then run ZDL feed one more time to make sure that your GER feed data is cleaned out. If someone goes in and makes any changes that causes something to happen in TASREV to a student's account, you have to do an end of day process all over again. So that is why we say you have to shut down Banner. You can't let students be making payments during this time. You can't let other people be processing payments, like third-party payments, things like that during this time, because if you do, you have to start over every time they make a payment, right? And that sometimes can be very difficult and frustrating. So, so if somebody does do something, you can look at TGA CSPV. That very first page will show you any active cashier sessions, so you can call that person and say, stop what you're doing. And then you can go through and run all of your end-of-day steps, run your TGR Apple, run your JV report, do all of that stuff, and then run TGR feed, blah, 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 just do a full end-of-day. If someone goes in and has to make changes to an application of payment only, so nobody entered a payment into the system, you just had to unapply and reapply for some reason, then you just need to rerun TGR Apple, ZDR feed, TGR feed, and then run ZDL feed again to clear that GER feed table. Then, if all is well and all is good, and your college balances by looking at TGR Recon Part A and balancing that to your TGR Ages positive aging report, and TGR Recon Part B balances to your TGR Ages negative aging report, then if those two numbers balance, then you are balanced. Yay! And you're done. And then all you have to do is run all of these reports. So once you balance, these are the reports that we recommend that you guys run. All of these are run on whatever day your college has shut down, which we consider June 30, because most colleges won't come back up until June 30 or until July 1. So, or what they consider their end of year. So here's the reports that you're going to need to run: your JV report, ZSR detail for all semesters, 20 current year, which for us would be 2024%, and then 20 new year, which would be 2025%. For those that are already registering for the fall term, you will have some data out there. For those that are not registering for fall term, you may not have any data for the 20-25%. And then TGR Recon, you'll run that again. You'll run TGR Ages, positive and negative. You'll run ZFR Audit. And then you will run ZSR Depot. ZSR Depot is going to tell you anybody that you have out there with a DREL so that you can account for that money that you still have sitting out there on the student's account if you are a college that leaves your DREL data out there and doesn't refund it within the fiscal year. I have this asterisk out here beside TGR ages and ZFR, beside TGR ages, and that's simply because we had some colleges that had some trouble balancing without this with balances population selection. I think all colleges are now balancing without it, but I didn't want to get rid of it just in case we had something come up about it. But in most cases, you're not going to have a population selection called with balances unless you are a college that has had issues balancing without that pop cell in the past. So that's just a note there for that. And then ZFR audit, we just give you the term codes that you will need to run with ZFR audit for your year-end reports. That's what those double asterisks down there. Positive TGR ages should match your TGR Recon Part A. Negative aging report should match your TGR Recon Part B if you're balanced. At year end, you're going to need to account for any miscellaneous cash and refund revenue. It is ideal for you to have $0 for cash and revenue for your application fees. So when we say miscellaneous cash and revenue, we mean anything that's sitting out there in the miscellaneous table. So the miscellaneous table is where we put our application fees for Target X, but then we run TZMR CPT at most colleges, and that reverses that information in the miscellaneous table and puts that information onto the student's account directly. So for your application fee, unless something has happened at some point in time during the year and you had to leave something sitting in the miscellaneous tables for application of payments, you should have nothing in the miscellaneous cash and revenue for APPL or 3APP or 2APP. If you do, then you have to account for that data, and there's nothing we can do to get it out if you haven't already gotten it out. At some colleges, they keep their application fees and their miscellaneous table very balanced throughout the year, and so if they have an issue with it, they go ahead and do a reversing entry manually in the miscellaneous tables, which can be done, but they know what they needed to reverse. So if you're not sure what you needed to reverse, then the only thing that you can do is just account for that miscellaneous cash that's sitting out there for your application fees. Now, that doesn't mean that you are not going to have anything in your miscellaneous table. If you do live work and you put that in your miscellaneous table, or you do other things at your college and anything that goes into the miscellaneous tables that's not reversed out, that data will also be there, and that will be data that you have to account for. Prepaid scholarships, which are your DRELs, are liabilities, and you have to account for those, and you will pull those using ZSRD Depot or Depot. And then after that, you just want to run ZFR audit on the recap page and run it by priority, and just make sure that you don't have any priority codes that are set to 900 or 990. If you do, then you may want to go look at those that are set to 900 or 990, because those didn't probably get changed back when you were doing application of payments issues or cleanup. And so you're going to want to change those back to something else so that when you start application for your new semester or when you come back online, stuff is not applying all crazy. And then you want to have no balances on FA detail codes at year end, right? So either your financial aid stuff should have either been applied to tuition and fees, or should have been refunded to the student by the time year end is here. After the balancing of Banner, it's recommended to extract your fiscal year data using TGIA CCD so that you can have that in Excel spreadsheets, because a lot of colleges, I'm learning, will extract their data into Excel, and then they can do pivot tables after the fact when the auditors ask for things, and they can say this is truly as of June 30, because that's really the day that we pulled the data. We just put it into an Excel spreadsheet, and now they're pulling pivot tables and doing different data requests that the auditors or someone else may have, for that matter, that they needed for the fiscal year. So it is highly recommended that you do TGIA CCD queries and extract that data into Excel spreadsheets. Some of the things that I have seen people do is they'll do a TGIA CCD query for FW%, which is your fee waivers. And they will pull that into an Excel spreadsheet so that they have their fee waivers as of June 30 for whatever year or whatever. Earned on revenue, same thing. Lots of people will pull in unearned revenue into their Excel spreadsheets, and then they can do reports and pivot tables off that at a later date. TGI CCD has been way better. When we first went to Banner 9 with the new extract process, TGI CCD was very slow. And if you tried to do large queries, it sometimes would even hang up the database. I don't think that has been the case. I haven't had anybody report that to me in the last few years, but we put that out there just as a reminder that if it's slow, you're extracting a lot of data, you may have to break that data into pieces, right? Or you may need to go into GUA UPRF and change how you download stuff. So if you have it set up to do file, I think file will open it in a browser window, and WebUtil will download the file to your computer. So you may need to go in and change the way that you download the information if it's super slow pulling up because there's so much data, or break it down. You can run TGI CCD query to extract data that's greater than 2024-17. So that will pull anything for future information, right? So if you are future dating or you've already started registering for 2025-12 or after, if you run it by 2024-17, that's going to get everything greater than 2024-16. So all of your upcoming data, right? So you could do a TGI ACCD query running it by term code, which is that. And you may also run ZSR detail and pull some snapshots of the new year on ZSR detail, which would, in this case, would be 2025-12, because if you future date, sometimes or if you've already started registering, sometimes you just want to know what you have sitting out there. So that's a good way to see what you have sitting out there. So now we're getting to our FAQs. So these are normal questions that we are asked generally all the time. So we just kind of put them in the FAQ so that you guys had them, so that you wouldn't have to email us and then wait for us to respond. You can just go look at this. How long should I be down? 2 to 3 days. But honestly, that depends on your college. Some are down a half a day, some are down a week. But on average, 2 to 3 days is where most colleges are at. Should users be out of the system when I start balancing? Absolutely. That is a yes with a capital YES, because it will cause trouble if you don't have that. How do I find my receivables? These two reports, TGR Recon Part A and ZFR Audit will give you your receivables. How do I find my cash and revenue? ZSR Detail and your JV report is going to give you your cash and revenue. How do I see my application to payments issues? ZFR Audit with parameter 04 set to a Y, those correct payments and correct charges population selections, and any of those TGI CCD queries that we talked about at the beginning of the PowerPoint presentation. How can I see remaining liability to the college? TGR Recon Part B and ZSR Depot will show you your remaining liabilities. Your JV report shows you your JV entries. And this is the important part that we were talking about earlier. What identifies reversing JVs and how do I fix them? Reversing JVs, you run your JV report with parameter 13 set to a Y. And then anybody that shows up on that report needs to be unapplied and reapplied as needed. If your data is clean, TGR Recon Part A should balance to your positive aging, and TGR Recon Part B should balance to your negative aging. And I hope I just said that right, because I feel like I said Part B twice. Let me say that again. TGR Recon Part A should balance to positive aging, and TGR Recon Part B should balance to negative aging. What can TGI CCD queries be used for? Those can be used for future data requests from auditors, but not only just auditors, but people in your area. Your VPA may ask for something. Your president may ask your VPA for something, and then you guys have these TGI CCD queries that you can run pivot tables and pull them Excel reports and things that you need on the fly with your data from June 30. Again, that would be all stored electronically I would say put that into a shared drive in your department. I hope everyone has a shared drive in your department. They're the best thing since sliced bread, especially when everyone is trying to share all of the same data and you're not depending on this person over here to put it on their PC and remember to back it up, right? Or if this person leaves the college and everything was on their machine, whoops, now you don't have access to it, right? So anyway, how can I tell if my sessions are reported and processed? The front page of TGA CSPV will be empty and there will be no skipped data on TGR feed. If your data has been fed, you can look at TGR Recon in the fed, not applied fed or fed columns. Those will tell you if you have anything in there other than 0, then you have data that has not been fed. If you have to unapply and reapply counts, what do? You simply run these reports all over again and then go back to your balancing process. However, if someone makes a true payment on the account, then you have to start over again with your full end of day. And then this is what I was talking about with TGI CCD being a little slow and maybe hanging a banner. If that happens and you start getting errors on your TGI CCD, contact your BPL as soon as possible because that has been known in the past to take down banner. But like I said, we haven't seen that in quite some time. So this is your parameters and all of the reports. These are the exact parameters that you will need to run for year end. And what this does is this goes through all the reports that we use. It tells you the suggested uses for these reports. I'm not going to read all of that to you because I don't think you want me to. So essentially, ZSR detail is the accounting detail report. It can show you revenue and receivables along with a whole bunch of other stuff if you run this. If you need the documentation, either email me or email Tracy, or we've talked a lot about the intranet at tcsg.edu and all of the Z processes being out there, the documentation for those. So you could absolutely go to the intranet and download the documentation for those. It's kept up to date every time we change it. And so it will be the same thing that me or Tracy will email to you. So you can go out there and do that. Here are your parameters that you will need. These are the exact ones for year end so that you don't have to even worry about, oh my gosh, what parameters do I run for year end, right? That gets a little stressful. The only thing that to note on this screen is those red boxes right there. These are screenshots that we took when we originally did this training in 2018. And so you will just need to update the date on those for the year. So it would be July 1, 2023 and June 30 of 2024. And we tell you that on there. So just note those. The ZFR audit is one of the reports that you will need. This is your reconciliation report and shows your receivables. It also gives you other suggested uses for this report. This is also the one that will run and you get your application of payments issues if you want to. And you can check, you can use this report to check receivable balances before you run ZFR refund. And that way you can see, hey, this student owes a balance and they're getting a refund. Can I do anything here to apply that payment to the outstanding receivable before I give the student a refund? So this one's kind of handy for doing that. Again, here are the parameters for those. We gave you the terms inside of those red boxes that are for this year. And then the red box over here with the Y just shows you that if you want to run it with application of payments issues, put a Y, otherwise leave it as an N. Your JV report. So your JV report just shows what's married to what, which is your application of payments report for a selected time frame or term. Your JV report is used for balancing student accounts and justification for booking to PeopleSoft, and some people book to PeopleSoft from their JV report. If you run this report with parameter 13 set to a Y, that's going to show you your negative marriages. But when you do that, it's only going to show you negative marriages and not individual students, right? So if you want to know if you have any negative balances or negative marriages, and you want to know who those students are, then you can set parameter 13 to a Y and parameter 7 to a no, which I think parameter 7 asked you if you want a summary JV report. So if you say no on parameter 7, it will give you a detailed summary report, which will also include your students along with their 900 numbers so that you can look those students up and unapply and reapply as needed. Don't forget that your recap for your financial aid recap is controlled by GTVS Tax. So if you have a new detail code, you're going to want to need to add that. I know if for those of you that saw that come out the other day, there is a new grant called GACE. And so GACE will need to be added to your JV report if you are a college that has any students that qualify for the GACE grant. Right? And then there's just a tip at the bottom of this one that talks about running during the year, running your JV report with parameter 13 set to a Y and parameter 7 set to a no. And instead of running it by term, run it by date. And the reason for this is if you have gone back to prior terms and you have made changes in prior terms, they're not going to show up if you run it by term, because the term would be a prior term, right? So if you made changes, say, to 2022-16 for any reason, the term code is probably going to continue to be 2022-16, but your effective date is going to fall within the July 1st, 2023 to June 30, 2024 date line. So check that, just because if you're out of balance, it could be something that you did for a prior term, but it didn't show up anywhere because you were running it by term and not by date. So that would be worth an extra run of your JV report, in my humble opinion, just to make sure that everything's balanced. Here are your year-end parameters for your JV report. And we suggest that you run this by date when you're doing it at year-end, not by term. Okay, TGR Recon. TGR Recon is your AR accounts receivable report. This shows your charges, it shows unapplied payments. It also at the bottom shows miscellaneous receipts and deposits. And your end of day must be ran before running TGR Recon, or it will not be quite right. Okay, so here are the suggested uses for this. Again, we just put a note down at the bottom that if you have balances for APPL, 2 APP, and 3 APP, at this point in the year, if you have no idea where those are coming from, then they're just going to be out there. You just need to account for them and move on, and then keep a little bit better eye on it the next year to make sure that everything is great. And if you keep up with it as during the year, you can also do reversing entries for your miscellaneous tables to correct anything that you have to manually put something onto a student's account. Here are your year-end parameters for TGR Recon. You are going to be running it by date as well, but there is one caveat to this report. It depends on the college. Some colleges balance just fine when you put a date in parameter 2 and 3. Some colleges don't. It's surprising, but if you call me up and you say my TGR Recon is not balancing to my aging report, the first thing I'm going to have you do is rerun TGR Recon, leaving parameter 2 and 3 blank. A lot of times that's all it takes for a college to balance. I don't know why. It's weird. I don't know if it has something to do with those prior year payments or something like that. I don't know. We've never really quite figured out why, but that seems to work for a majority of the colleges, so I've done that. So we have a few notes down at the bottom about pre-registration before June 30 and future dating. We just tell you that the tuition payments will feed, but will be in the unfed column on Part B, because the charge actually won't feed through until July 1st because it doesn't become effective until July 1st, but that's okay if you're future dating. If you're not future dating and you have stuff hanging out there, you have an issue. But if you are future dating, you may have some stuff hanging out there in Part B. And then the most important thing that we want to talk about when we talked about the GL accounts earlier with the no chart of accounts at the top of TGR Recon is that TGR Recon only cares about your A and your B accounts, your general ledger account. That is what TGR Recon cares about. But on the other hand, TGR Aegis only cares about student PITM. So if these reports are out of balance, you may have a issue with your GL accounts on TGR Recon, or you may have an issue with a student PITM that has been orphaned. And when we say an orphaned PITM, most of the time that happens when, say you guys have a duplicate entry on an ID and you have moved all of the data over from one ID to another and you say, okay, I need this ID to be deleted because it's a duplicate. Sometimes when your Banner project leaders run the scripts that delete these students, it deletes part of the data, but not all of it. And if it leaves it hanging out there in the TASREV table, you're going to pull it on TGR Recon because TGR Recon sees the detail code and only cares about the A and B accounts. But when you run TGR Aegis only cares about the PITM. Well, if the PITM doesn't exist on Spaden anymore, it's not going to pull that student, so those reports could be out of balance due to that. We have had that happen a few times over the years. So if that happens, part of those scripts that we have in the population selection documentation that I'm going to provide for you will help you find those students that are orphaned. So, and then your TGR Aegis report. TGR Aegis analyzes your accounts that are past due. It produces a list by student, and then it is what you balance to your TGR Recon report. And then also, if you have some sort of issue with your TGR Recon report, then TGR Aegis can help you find those students that are tied to that. Here are your exact parameters for your positive aging report and your negative aging report. The only thing to note is the date. It changes to 6/30/2024. And then we come to the fact of what if things don't balance? So here's some of the things that we have people try, and then we kind of just go from there. Identify the accounts that are not balancing. Check to see if everything is in its normal state, even for prior years. So this is where you have changes that occurred in the current fiscal year to prior year data that is showing, that may not show by term, but it will show by date, right? So just make sure that you check that. Review your GL data for manual postings, identify any detail codes that you can that may be involved, and then run your aging report for those detail codes that are out of balance so that you pull the list of students for those detail codes that are out of balance, and then you can pinpoint down to the list of students that you need to look at. If TGR Recon and TGR Aegis don't balance, you need to rerun TGR Recon, leaving parameter 2 and 3 blank. We need to look and see if that doesn't work, then we need to look and see if you have orphan PITMs even for prior years or prior terms. Again, we have scripts for that. You need to look to see that you don't have any AR data that was not merged or fed before it was deleted. Because when you're combining accounts for a duplicated person, you really should be moving all of the data over and then running your end-of-day processes to feed all of that data through before you say, okay, yeah, go ahead and delete them, right? Because you're deleting data off from their account as well. Clean up any orphaned PITMs that you have out there, if any. And then if your college, which I don't know that we have any, but if your college uses term-based and year-based flags on your detail codes, make sure that all of those are in sync across all of your detail codes, which I think we only had one college that's doing that, but I don't think they do that anymore. This is just telling you to rerun TGR Recon if things don't balance, leaving parameter 2 and 3 blank. However, parameter 5 and 6 should always, always, always have a date put in there. 5 and 6 is your date for your miscellaneous data, and miscellaneous data that has stayed out there, it stays out there forever. So you don't want to pull all of that. You only want to pull the data that is for this fiscal year for your miscellaneous data. It should always have a date. And then what if things don't balance? If they still don't balance after all that, go back to TGR Recon, double check to make sure that your A and B accounts are there for all of your detail codes. If you have any that don't have any chart of accounts, double check those. Make sure your A and B accounts are out there, because TGR Recon only cares about A and B accounts, whereas TGRA just cares about PITMs, right? So that could, if you have a missing PITM, that could cause TGRA just not to balance TGR Recon. If you have missing GL or A and B accounts, that could cause TGR Recon not to balance TGRHs. What if they still don't balance? If they still don't balance and you've cleaned up all your detail codes, you don't have any chart of accounts that are still out of balance, and you feel like everything is great, then what you need to do is take your AR balance for your total open receivables and add that to your total unapplied payments for TGR Recon. The sum of those two should equal the sum of your TGRHs report, right? So positive aging minus negative aging, right? Then you're going to look and see overall, do they balance by the exact dollar amount when comparing those? And if they do, then you may have an A and B account switched. So instead of like on tuition, I think most people have, what is it? Your A account is your, oh, I can't remember now. Your A account is your revenue and your B account is your receivable, I think. They may have those, you may have had those swapped, something along those lines. So here's an example of what I'm talking about. So if your total for Part A is 5,833,191.74, and your TGRA is your positive is this, and then your Part B is this, and your negative is this, the difference between this number and this number is $80,949.42. The difference between this number and this number is negative $80,949.42. So in this particular case, they are off the exact dollar, just one's negative, one's positive, which means that overall they do balance. However, there's an issue somewhere, most likely with your A and B accounts being switched or flip-flopped. So it kind of just gives you the math of how all of this works out. Because if you take this Part A total and you subtract out Part B, and you take your positive aging total and you subtract out this number, they're the exact same number, which means that you are balancing overall. To check to see if your A and B accounts have been switched, you can run ZXR DETC for now. ZXR DETC will be one of those reports that as we are completing the COBOL conversion, it will not be included in the conversion. It will be retired. However, Ellucian has come out with a baseline banner version of this report, so we will just simply start using their baseline banner report of this instead of ZXR DETC. I think it's TGA DETC or something like that. And it kind of does the same thing, just lists out all of your detail codes and the information that goes along with them. But what this does is it lists out all the information all across the page on one side so that you can see, oh, okay, here is for my cash payments for this, here is my A account, here's my B account. And you can just go back and forth and look and say, oh, no, maybe I've swapped these, right? So that's kind of what this report does, and just review those A and B accounts. You can also look at your JV report, and you can run TGI CCD queries on those totals that don't balance on your FA recap. This just gives you some breakdown of how to run the different reports to make sure that you don't have anything weird hanging out there. and then you can pull this information into a browser window. If you want to pull it into a browser window, if you go to GUA UPRF, you can change your particular user preferences. And I think if you set that to, I want to say if you set it to file, it's going to open in a browser because it's backwards from what you think it should be. So if you set that to file, it's going to open up in a browser window anytime you open anything from job submission. And then it allows you to use your normal functions like Control F or things like that to search for fund descriptions that are out of balance so that you can see. There might be something that needs to be unapplied and reapplied because it's applied to the wrong thing or it applied weird or something. And then if I can't help you, I can probably find someone that can, and or we will open a ticket with Ellucian. Now, we've had one college that had trouble balancing one year. I think they were off by like something like $660. And we kept the ticket open with Ellucian for days upon days upon days. And even Ellucian couldn't figure out what had happened. And so the final decision on that was that the VPA made the decision to just use that as a certain amount, a threshold, a discrepancy threshold to be okay with being out of balance by $660. And so there are times where we just can't figure it out. I've only had that happen one time since I have been here, and I've been here since I've been at TCSG since 2015. So it doesn't happen all that often. It just all depends. But don't be afraid to email us or call us. Tracy and I are both available. We pretty much make ourselves available all day on June 30, and that's all we do that whole last week is just leave ourselves open to help you guys so that you have all the help and support that you need. We never want to leave you out there hanging by yourself. This is my contact information. This is Tracy's contact information if you don't already have that information. So just give us a call or email us if you need us. So let me look at one quick thing. Okay, so I think I'm going to stop the recording at the moment. So let me do that.